Crude oil has gone from over $100 a barrel to $30 a barrel, remained there for an extended period of time, and have since risen higher. There has been much consideration of who benefits the most if oil is forced down. Countries that are big oil exporters and rely on consistent high prices are unable to cope for long if prices are low. So who benefits the most if prices are high? You came here for the truth, so let me unveil that for you. Today we're going to look at crude oil. I want to talk about the emerging markets that's been in the news recently. So much to discuss. Let's begin. I want to see if I can get this all into one video, beginning with the crude oil price. You can see that as the years have gone on, this has been a very volatile commodity. During the 2008 financial crisis, things came down from nearly $150 a barrel all the way down to under $30 a barrel at this point here. You could see that it had risen up to a level of around $100 a barrel. But you saw what happened in the news, that all of a sudden there was this glut. It came out of nowhere. And as such, the prices had dropped down around that same price, $30 a barrel, and it has since risen higher. So if we look at the prices today, according to oilprice.com, you can see that crude oil is at $71, Brent is at $78 and change. So the prices here have more than doubled in this time period. I want to look at who has benefited from the price being high and who really loses out when the price is low. I want to look at all of the angles here and cover some points from each. I want to begin with this. Washington's renewed sanctions on Iran support China's newly established oil futures. The sanctions can make the yuan a more preferable currency than the dollar on the oil market. So it's something very interesting that's happened recently, that they've opened up this Shanghai crude oil exchange, okay? And it started off very small, but there's high hopes for it, for countries like this to take advantage of the situation. Hey, you're going to be putting pressure on me. You're going to make it impossible for me to do business on your markets. Okay, well, I'll do business with this market. And that's what's happening here. It's not just this one country. China wants to do business with a whole bunch. They'll do business with anybody, it seems. Since their launch in May, the interest in the renminbi-backed oil contracts has steadily surged. Traded daily volumes hit a record 250,000 lots last Wednesday, and the share of yuan contracts in global trading jumped 12% compared to 8% in March. So you'll see that they have risen dramatically, short period of time, and it's good news for those who want to see this into the future and try to see a different level of competition taking place. I don't think anybody likes a monopoly. It's just not a good thing. The contract is thundering into action. It makes sense for Iran to begin selling oil under contracts denominated in yuan rather than dollars. I mean, it's pretty obvious what's happening here, that they have done this, and it looks like the statistics make a lot of sense for it here. Look, China is the largest oil consumer in the world and buys the most from Iran, a major OPEC producer. Beijing buys 20% of Iranian oil exports, which accounts for 8% of its needs. So it is an important trading partner, and they're doing business in the right way. I think that this is very beneficial for them, and we will see this just continue to be tighter and tighter bond in between these two countries. Russia obviously is directly correlated with this, and that's my next point that I want to make. You saw the prices, which were at $100 a barrel, drop down to $30 a barrel. You have to think, who is going to benefit? And by the way, the reason that these drop down, there's no way that a magical glut of crude oil developed somewhere. I don't believe it. There was no reason for it to rise in the first place. Maybe it should have stayed low, but there was no reason for it to be at $100 a barrel. So one or the other is wrong. Maybe it's somewhere in between. But what I can tell you here is that a country like Russia obviously needs to be outputting a lot of oil. They need the world to be buying their oil in order to have a surplus, in order to be able to fund their government. So they've been struggling with that. You've seen their currency at a time was struggling. You could see the stock market. You could see their basically had some times of despair while oil was at $30. Other countries here, like Canada as well, has the same issue. They need to be able to output oil. Venezuela, obviously, you had seen that as well. So let me move on. Shanghai oil futures. Look at this, how they've been increasing here since April. Truly been remarkable. A lot of people were surprised about how far this has come. China oil futures volume versus the WTI crude futures volume. Hey, they're gaining more than market share. Now, is it necessarily going to take over this year or maybe even next year? No, but it's definitely putting some pressure on it. And that's a good thing, as I've said before, because you don't want to have a monopoly. I'm not for that. I think that competition is always good. It's always a good thing to have competition. We have more competitive pricing, maybe a better product. You can have better options available to you, to the buyer, or whoever it might be, right? Now, this here is more interconnected with this. China is positioned to be a chief beneficiary of the U.S. decision to withdraw from the Iran deal that would give China leverage to demand oil imports to be priced in yuan, several currency experts said. Well, with all of this happening, there are obviously people or countries that are benefiting, and this is becoming very evident right here. As the pressure gets mounted, pressing down on certain countries, well, you have new opportunities that rise up. And China had, taken a long time to get this online. And I think that it's still beneficial today. It would have been helpful to have been around a few years ago. However, they got it on the market. It is available. Many people said it would never happen. But of course, here we are today. It's happening, and I think China is going to be benefiting massively. Plus, all of these countries here that are big exporters of oil will definitely be benefiting from a higher price. Now, the higher price from, let's say, a year and a half ago, maybe 2 years ago, where you saw the price being very low historically, what exactly has been benefiting all of these countries in the meantime? Let me go into what I'm talking about here. Canada, get my head straight. Canada right now has only one industry, and that is housing. Housing has been the industry keeping it alive throughout this time, because you have obviously construction costs, you have the tradespeople working, you have the financial aspects, so you have the bankers and the people loaning the money, and you have the real estate agents, and you have people who do create things for flooring and tiles and lighting fixtures, Home Depot benefits and Caterpillar benefits, and everybody, all these different companies involved and trades involved and people and everything. So it has employed a very large percentage of the Canadian population in one way or another. I think that I've shown you a statistic from a couple of years ago that was 7%. However, that number has grown, and if you factor in industries like the retail more with like Home Depot and these companies, I think actually the number could be larger. But anyway, what I would say here is that a country like Canada has been suffering because of oil. Now, they are, in this article here out of the Financial Post, they're making too much of a big deal about it, because I think that Canada doesn't export enough oil like some countries like, maybe Saudi Arabia, for example, that it's everything. I mean, that's their bread and butter, right? But Canada does need that, and it provides them with a surplus. As they say here, crude oil alone generated a $70 billion trade surplus for Canada. The oil industry looms large in the Canadian economy and in many ways pays the rent in Canada. Yet many Canadians appear unaware of how critically important the oil industry is to the national economy, a fact often lost in the debate over the Trans Mountain Pipeline expansion. They're talking about where they want to get their oil to. They want to send it south. They want to send it west. They want to send it in all directions here, and it would be beneficial for the economy. We could talk about, environmental aspects or anything else. That's an issue I generally don't cover. But what I want to say was, if you can get that oil to be moved, to be refined, to be converted into something that somebody will buy, then it is beneficial for the economy in Canada. If prices are at $30 a barrel, trying to get this very bad crude oil out of the ground to be able to refine it, it's not worth it. So that's bad. And then, of course, you see how that affects the economy as a whole. Because in that region where the tar sands are, you are seeing, real estate that took a dive right after, because the jobs were being lost as a result. The oil industry started firing people. Same in the U.S., firing people. So anywhere there was jobs around surrounding oil, companies were laying off people. People had to move out of their homes. You saw the businesses around it decline and so on. So there's a ripple effect that occurs. That does, start to come back now as you see oil prices rising. So always remember to factor in all of the steps involved here. Okay, I have to cover so much more info. Let me go into it. Just more details here. How you can see that the US and the EU are battling between each other because of everything that's been happening. Saying, hey, you got to scrap your Nord Stream 2 or we're going to have a big problem here. This is an issue that has been, further escalating as time goes on. This EU official said this. The strategy seems to be to force us to buy their more expensive gas. As long as LNG is not competitive, Europe will not agree to some sort of racket and pay extortionate prices. They're saying, hey, we're going to get it from wherever we can cheaply. And that makes a lot of sense. They want Russia to be able to put a pipeline, send it over to Europe, for gas, for oil, to do business in every way. This is becoming very interesting, very exciting, and I'm going to be covering it obviously as time goes on. Okay, moving on. We're looking at emerging markets now. Emerging markets are really tanking. I mean, it has been something that has surprised a lot of people because it's happening in such a short period of time. That's emerging markets. Their currencies here looking terrible in... you're seeing the Brazilian currency taking a nosedive. They've really suffered here. I'm looking at all of them, and one of the worst. I mean, how do I use the proper words to describe what's happening in Venezuela? I mean, I've never been there. I don't know. But what I can see is that the currency is gone. If you are located in Venezuela, if there's any way that you can get your hands onto something real, do it. Because that's something real. Maybe it's a table, maybe it's chairs, maybe it's anything, wood, nails and tools, construction tools and anything. That's going to hold a lot of value in relation to the currency. Get rid of the currency altogether. If you have currency, you trade it immediately. As soon as you get it, you trade it immediately for something, anything. And that way you can maintain your value. Look at what has happened. I mean, all throughout, like if we're looking at any point in here, you're seeing just a flat line. But if we were to zoom in on this and basically get rid of all of this rise that we have seen, you would actually see that it's going up and down. But that doesn't really happen on this chart because it has been so ridiculous in the recent past year. I mean, 237,000 to 1. And that's the black market rate, which is definitely more accurate. Okay, then I want to show you this. There's a lot of speculation about what has happened in these bull and bear cycles. And you could see that, look, the market drops by 50%. And so, that's okay because I had 100% gains. But you have to remember where you came from, where it rose to, and how much you've lost since. Not necessarily in a percentage terms, but think about it in actual points. And you can see that there are times in which, historically, the bull market is completely wiped out or almost completely wiped out by the following bear market. Always throughout time, there are bull markets, there are bear markets, there's going to be crazy rises, going to be crazy falls. It's just the way it is. However, what you need to address is the fact that how long is it going to take for that bear market to leave us and we can return to a bull market? And then how high does that bull market go? How will we be able to determine in such a short period of time? Because you don't know what's going to happen until it happens. Everyone's always surprised at that peak. So looking at this here, I don't want to cover the details of which I've covered a similar chart before, but essentially you can see that it is something to consider that over time, we have to be able to transfer our wealth into different assets, especially with paper assets, because at these times, they become very volatile. So you can't just leave it in something and hope that it will just continue to appreciate, especially if you're not getting dividends. If you're getting dividends, that's a different story. However, you look at specifically with price appreciation, there are times when there are cycles and you can move money around. Okay, it takes a really astute investor to do so. However, I definitely would say that's the only way to invest in paper. Bear market repos, S&P 500 bull market gains repossessed, quote unquote, by subsequent bear market, and you'll see that the previous gains have been wiped out, several times before. 2007, one example, all the previous gains completely wiped out. So if you look at the stock markets back from 2000 and then up till I think it's about 2014 or so, all of that time frame, there was basically nothing happening. Then you have to factor in inflation. When you do so over that period of time of 14 years, there's a lot of inflation accumulating during that period, and that's not ever factored in. Last but not least, just wanted to note the fact that Italy's bonds and stocks slumped as the five-star movement and the league reached a coalition agreement to govern the country, outlining proposals that may pressure public finances. They're deciding back and forth. They're going ahead with this, and it seems like they've found a deal, but regardless, the stock market doesn't like it. Italy is in big trouble. They are massively in debt, and that is truly an understatement. And I would be watching this very, very closely. I wrote about it in my first book. I wrote about it in my second book, and how we need to pay attention to the euro viral contagion. And that is very, very important to note with Italy specifically. I'm going to end it there. If you found this video informative, please give me a thumbs up. I went all over the place, and I know you do appreciate that very much. More good information coming to you. I will always bring out the best of the best for you, try to get it to you as soon as possible so you have that information readily available. That's all I'm going to say. If you found the video informative, I know that you will find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. You can actually flip through these books. All you have to do is go over to Amazon. There are links in the description of this video. You click on that, it'll bring you over there. There's a look inside feature, and it will allow you to flip through the pages of the books to see if you like it. Take care.